Hi traders, and welcome to this Pepperstone presentation on the costs to place a trade. There is always a cost to every trade that you place, and it is important for traders to understand all of the costs associated with trading to ensure they can assess the whole picture when evaluating results. So in today's presentation, we'll explain the various spreads on trading instruments like Forex, commodities, indices, cryptocurrencies, and shares. We'll talk about the rollover interest rates, also known as the swap rate. We'll look at the various commissions on Razor accounts. And we'll talk about how we can keep our trading costs lower. Pepperstone aims to offer high-quality competitive conditions so that traders can focus on what really matters. To do so, they use multiple liquidity providers from Tier 1 banks and institutions to give you access to competitive quotes and deep liquidity on a wide range of financial instruments, including Forex, commodities, and indices. This allows them to offer razor-sharp pricing, low commissions on Forex, and low-latency fast execution to all clients. Let's first talk about spreads. In Forex trading, the spread refers to the difference between the bid price and the ask price of a currency pair. The bid price is the price at which a trader can sell a currency, while the ask price is the price at which a trader can buy a currency. The spread is usually measured in pips, which is the smallest unit of measurement in Forex trading. See in the example on the screen how the bid and ask price are separated by the spread, which is between 0 and 0.1 in this example. Other instruments like commodities, indices, cryptocurrencies, and share CFDs are measured in points. As you can see in the example on the screen, the Australia 200 index is currently a 1-point spread. And see how it actually moves as the price changes, but maintains this level as 1 point even though the price on the bid and the ask are changing. Let's now talk about swap rates. Swap rates are a rollover interest rate that's earned or paid for holding positions overnight. Generally, swap rates are determined by market forces such as supply and demand, as well as expectations of future interest rate movements. Swap rates are influenced by factors such as prevailing interest rates, credit risk, liquidity conditions, and market participants' expectations. Pepperstone simply make an interest adjustment to your trading account, which is either a debit or a credit, to reflect the cost of funding your position. We can see here on the screen the calculation for the daily swap for Forex. And we can see here that it's slightly different for indices, as it's worked out using a few different calculations, but it also factors in the London Interbank offered rate. Commodities again are a bit of a change in how it's calculated. Now remember that Pepperstone do this automatically, so it's not necessary to actually know the calculation, but it's good to understand why and how the swap rates are calculated. Then we can see the shares, slightly different again for the CFD version. Now let's move on to commissions. Pepperstone commissions are only charged on Razor accounts when trading CFDs on Forex. The amount of commission you pay will depend on which of Pepperstone's platforms you are using, as they are calculated differently. We can see here in the example on the screen that these are some of the commissions for the more popular trading currencies on the MT4 and MT5 platforms. It's also important to note that the MT4 and MT5 platform micro lots are rounded up or down accordingly. For CTrader commissions, they're charged at $6 USD round trip. As an example, if you are trading 100,000 Euro USD, the commission charge will be USD $3 to open a contract and USD $3 to close out the contract. If your trading account is not in USD, Pepperstone will convert the cost based on the current foreign exchange conversion rates into your nominated account currency. TradingView is different again. Commissions are charged at $7 USD as a round trip. As an example, if you are trading $100,000 Euro USD, the commission charge will be USD $3.50 to open the contract and USD $3.50 to close out the contract. And if you are trading in an account that is not USD, it will be converted to a cost based on the currency foreign exchange conversion rates into your nominated account currency. Now let's look at reducing trading costs. If you're a short-term trader or a scalper, It is important to be aware of the swap rate time of day rollover to ensure that you don't unnecessarily pay the swap rate if you are only intending on being in the trade for less than 24 hours. Not all swaps are debits, but even swap credits can have an effect on the market around rollover time. When choosing a trading platform and account type, be aware of how commissions work for the platform. Depending on the frequency of your trades, you could see a decrease in commission costs by choosing the most appropriate platform and account for your trading style. And if you're a high-frequency trader, it may be better to stick with the major pairs, as they will give you the tighter spreads. Although it may not seem like a big cost, over time it can add up and be a considerable amount of savings for high-frequency traders. In today's lesson, we learnt about trading spreads, and we talked about the various instruments like Forex, commodities, indices, cryptocurrencies, and shares. We talked about the rollover interest rates, also known as the swap rate. We discussed the various commissions on Razor accounts for the different platforms. And finally, we learned about how to keep your account trading costs lower by selecting the appropriate account and platform for your trading style.